Cloud. Perfect. What's going on, everybody? You know, it is Tuesday, 6:40 p.m. Pacific time, and I know on the East Coast it is super late, so I want to definitely thank you for hopping on this call. Clearly, you know what I'm saying. Time is valuable, and if not the most valuable commodity in the entire world. And you could be doing something but you wanted to hop on here and definitely learn a little bit more about, you know, trading and get some more information, guys. So real quick, I want to thank you for that. And also another thing, guys, you know, these calls are meant for you. You know, they're meant to help bring more value into your guys' life in any single way possible. You know, I think when we first started this journey, me and Derrick, actually a couple of years ago, Chris had actually got involved earlier with Forex and stuff. But, you know, we were just like you guys. We were somebody that was, you know, blowing accounts, like making $5 a day, getting excited about making $10 a day. And then it builds up over time. So real quick, guys, you know, you guys already know a little bit about my story, but I just want to kind of bring up Chris to kind of tell you a little bit about his trading journey. So real quick, you know, me and Derrick, we actually became roommates with each other about like 8 months ago. Absolutely insane, because when we first started in this journey, you know, we were like brothers. We were like bickering sometimes here and there, but I was so much growing with this person when it comes to the trading side, and also in all these other different aspects. He's grown as a mentor for me, guys, and he's also a mentor for also, you know, thousands of people on IML TV. So guys, please, when I introduce him, please, when he's giving you guys information, get your notebook out and take out notes, guys. Understand that note takers are money makers, and notes are a visual representation of all the hard work and effort that you've put in. You only retain about 7% of the things that you actually hear and see. You will only retain 30 to 50% of the information that you actually write down. So you need to go out back there and look it over again and again and again, guys. So real quick, Mr. Chairman 25, Mr. Christopher Derrick, this guy has been known as the account flipper, you know, craziest flip of my entire life. When I first came, I'll never forget it. He took a $200 account to $45,000 in 1 week trading. Blew my mind, completely shifted and altered my perspective. I can make income claims because, you know, we don't want to make it, but, you know, every single person here is in iMarkets Live right now. So Chris, kind of go over a little bit of your trading journey, something that kind of more or less shifted your entire perspective. And maybe we could answer a couple of questions at the end, but you can kind of go over maybe a quick session on how you maybe mark up a chart, how what helps you look at the trend or the term in the long run. And guys, please take notes. You know what I'm saying? This guy's time is super important and super valuable. We're not trying to take anything more than 30 minutes. So yeah, we'll get this going, guys. So Mr. Christopher Derrick, are you on there?
Yeah.
Definitely, man. Here, let me see if I can just make you the, yeah, there we go. Let me make you the host, boss.
Yeah.
Crap. 1 second. Technical difficulty, guys. There we go. Take it away, boss.
Awesome. So what I do when I trade, I just usually take a coin and then I toss it up in the air. And then if it's heads, I sell it. And if it's tails, I buy it. No, I'm just joking. Guys, it's an absolute pleasure to be able to teach in front of you guys today, to give you this information. What I want to do is like, I really want to go into the whole mindset of everything. And also my main focus now when it comes to trading and even on the marketing aspect is so that you guys could be able to do things even when I'm not around, or even when John's not around, for the whole marketing aspect. If you could get a good training to the point where you have like a sustainable homework they could do on a consistent basis to drop in the charts. You know, what a lot of people don't realize is that with this, the reason why I kind of draw everything up so fast and things that became a lot more accurate is because, you know, I've been teaching for a while. You know, I've been on these charts consistently for years, since 2000. Well, not even that many years, but since 2015. But I was consistent on a day-to-day basis, especially when I was teaching. So I got to see the charts happen over and over and over and over again. So repetition is your reputation, this whole thing. I think one of the things that people lack when it comes to this is they spend more time trying to just watch videos and coming onto the sessions, and they don't put any time into drawing at all. And the drawing that you do is takes 5 minutes, but then we don't really practice on back testing on a consistent basis. You know, so if people complain about the lack of results, it's just the lack of back testing. It's the lack of actually being in the gym, of, you know, consistently drawing things up every single day. You know, one of the things that helped me a lot is no matter what, even if I wasn't trading, that I would always look every single day and look at the move that happened, and I would highlight that move and I would ask myself why, and then I draw why it happened. As you guys can see in my sessions, we do that, every session after. What we do all the time is we always look at the trade from the previous day, so we could go over it, because that's the part that is the key to success when it comes to trading, is the whole repetition factor. You start to see things happen over and over and over and over and over again. And has anybody ever been here that's on this call that has back tested, a lot more than you have before? You start to see massive results. Am I the host?
Yeah, you're good to go.
Okay, cool. Just make me the host, because sometimes when I did mute all, it muted me.
Oh, my bad.
It's all good. I was trying to say a joke earlier, and then I muted myself. I was saying that in order for me to trade, if I really want to know exactly where it's going, if I toss up a coin, and if it's tails, I sell it. Now, the reason why I say that is because that's how most people act. Like, a lot of people act like they take trades based off, chance rather than actual probabilities. I'm going to give you guys an example on this stuff so I can show you. Okay. I had this drawn up since yesterday. Okay, cool. So I had this drawn up since yesterday. And as you can see, we waited for price to come to a certain area. If not, if it did a retest, that's when we enter into the secondary zone. And you can see what I did was I drew up, the areas of the trend. Now, I'm just going to show you guys exactly what I did. And this is the same training that I'm going to give to every single person. It's going to be consistent all the time, because there's nothing else that I could add into this. Like, there's nothing else I could add into at all whatsoever. That's like me trying to find, if it's not broke, don't fix it. Once you understand the basic technicals behind everything, all we have to do is put in the time on the chart analysis and the back testing for it to be consistent in order for us to get better. If we don't, we're always going to be seeking more information. But the truth is, you already have the keys. Every single person here knows how to draw support. Every single person here knows how to draw resistance. And every single person here knows how to draw zones. Every single person knows how to highlight areas. Once you focus on that, that's when everything starts to change. So I'm going to give an example on this. Say, for instance, in order for me to get better, what I would do is I'd put myself into a zone. I'd go on to the reason why I listen to Majestic Casual is because I could listen to the mixes, and frequencies is key. For a lot of people, I think they neglect their emotional state when they trade. If you're trading in the sense of desperation, you'll fail because you're impatient. You're quick to jump into the trades. And already you want to come with a positive mindset and realize how easy this is. But I do want to break down some stuff that to some people isn't going to seem that attractive to most. Everyone's all super impressed. Who here is impressed with the trading flips? I can't believe that you did this and you turned to this much. How many people wish that you could do that? How many people is like, oh my gosh, that's so powerful. That's crazy. That's so exciting. Okay. The truth is, I used to want that same type of reaction from Chris Terry. I wanted that reaction, but the truth was he was always mad at me consistently every single time I did big flips. And the reason being is because I was doing a disservice to you guys. I was making it cool to do that, but in all reality, a lot of people are trying to do that without even studying and even trading consistently first. So what happens is a lot of people try to do that and they blow their accounts. What I want to show you guys is the proper way to trade and where your accounts should be consistently after 12 months. How many people, you could write into the chat while I'm typing this stuff, but can anybody write about how long that you guys have been trading or learning how to trade for? 6 weeks, 4 months, a month, 2 months, 11 months, 3 months, 1 month, 3 months, less than a week, 3 weeks, 2 weeks, 1 month, 1 year. Okay, cool. Awesome. 4 years, 3 months, everything. Okay. Now, for everyone that's brand new into this, that just started, you guys are very lucky right now. For everybody else that's been trading for more than like a year to 4 years, what would your brokerage account be right now if you just traded consistently with proper risk management? You know, the reason why I say this at first is because people aren't really attracted to this, because it's not attractive, it's not sexy to talk about, 0.01 per 100. Now, the reason why I'm saying this is because when you have a 20 to 30 pip stop loss, you're risking $2 to $3 per trade, which is 2 to 3% of your account. Now, how many times, let me ask you guys this, how many times have you guys been in trades where you over leveraged your account and then you got margin calls, which means it took it out no matter what, and then it continued going into the direction that you called in the first place? Has that ever happened to any of you guys? Majority, right? Every single person. Now, how would you guys have felt that if you had proper risk management, you would have been able to handle the drawdown? So what happens is, say for instance, is this. If you took a trade, you have $100 in your account and you see it fluctuating anywhere from like 15 to 20 pips, that means you're fluctuating about $1.50 to $2. How many of you guys would be scared on that trade? How many of you guys would be freaking out? Okay? Probably nobody. Now, the reason why I'm saying this and to do this as well is I want you to focus on this consistently, even with swipe trades. I want to find a way for you guys to be able to utilize the services and also be able to profit on a day-to-day basis from your own personal trades. But here's the problem with everybody with swipe trades. Who here has won with swipe trades and also lost with swipe trades? Now, I'm going to give you guys a reason of why, okay? I'm going to give you some rules in order for you guys to actually capitalize on this. Maybe like a little swipe trades thing. So this is what happens is you'll see swipe trades win 2 to 3 trades. You get super excited. Then you'll start taking the trades. Then the next 2 trades you take are the losing trades. And then you're like, you know what? Swipe trades sucks. IML sucks. I don't ever want to use swipe trades. Swipe trades doesn't work. So you stop taking those because of those 2 bad trades. And what happens is when you stop taking the trades, 3 to 4 good trades happen. 150 pips, 180 pips, 200 pips, whatever it is. And then you get excited again. So you start taking those trades, but then you get the losing trades. And how many people have felt before that said, why am I always taking the trades that are bad? Anybody go through that? So the whole main point is to be consistent, to be 100% consistent, and to take all of them with 0.01s, because no matter what, you're risking $2 to $3 per trade. Well, the cool part about it is that when you're doing that, say if you have a 20 to 30 pip stop loss off each one, say if you out of 5 out of 10 trades you won, and the other ones you lost. If you're risking 30 pips off each one, that means you lost 150 pips. But what if you gain even just 50 pips off the other trades? You would have made 250 pips. So even if you had a 50% win ratio, right? What is 250 minus 150? You still had a positive return on investment. You still made 100 pips. But you guys will never get to experience that if you're over leveraging your account, because one trade could wipe out your entire account or wipe out 30 to 40%. And then you blame the system and you blame Forex and you said it'll never work. We've been there, done that, right? Who's done that before? The reason why I'm saying these relatable things is because these are things that need to be talked about. Okay, so here's the goal. This is what you do. You want to do this. From now on, every single time you take a trade, can everyone promise that you'll do 0.01 per 100? 0.01 per 100. So if you have $500 in your account, you're doing a what? A 0.05. If you have $1,000 in your account, you're doing what? A 0.10. Okay? Can everyone do that? Can everyone have the mental discipline to take every single trade 0.01 per 100? Okay. Also this too as well. No matter what, whether you're taking regular swipe trades or you're taking your own personal trades, no ifs, ands, or buts. 10 to 15 pips in profit you do a 2-pip stop profit. What that means is if you bought it and this is your stop loss, the moment this goes up 10 to 15 pips, you take your stop loss and you put it 2 pips above the entry. Okay? How many of us would be in more blue if you did that? That price went up 10 to 15 pips, take your 2 pips or your stop loss and 2 pips above the entry. If it's a sell, okay? If it's a sell, price drops 10 to 15 pips, you take your stop loss and now you do 2 pips below the entry. Does that make sense? What happens is you're protecting your account. If the trade is good, the trade is good. Because people always ask me in their rebuttal all the time, but Chris, what happens if it hits your stop profit? You didn't lose any money. You didn't lose any money. But what if it hits your stop profit and keeps going up? You still didn't lose any money. Which one would you rather have? Would you rather have a risk-free trade or risk losing all the time? Which one would you choose? Exactly. So focus on that, because I bet you, for everyone that has been taking swipe trades, if you took every single one, did a 0.01 per 100, 10 to 15 pips in profit, 2 pip stop profit, how many of us would be in the blue right now? If you took every trade, 0.01 per 100, 10 to 15 pips, 2 pip stop profit, how many of us would be in the blue? It's not the fact, trading is all about maximizing your profits, and it's a lot more surgical than we think. It's a lot more articulate than we think. All we have to do is just know exactly what to do at certain times in order for us to progress. But everybody thinks that we just be super accurate with the trade. We take it, high lot size, quick come up. But for a quick come up is a quick come down. Okay, so that's that. 10 to 15 pips in profit, 2 pip stop profit. 0.01 per 100. I'm going to give you an example. How many pips do we average, let's say, a month when it comes to either, who here feels that with the trading style that you guys have seen, that have seen my trading style, how many of us feel that you could average 1,000 pips a month with it? Easy, right? I'm going to give you the math on this. If you're averaging 1,000 pips, every month, that means you're doubling your account every single month, even the 0.01. You catch 1,000 pips, what happens? Your $100 account goes to what? 200, right? I want to show you guys something on what happens if you do this consistently and make a year plan. If you have $100 in your account, the second month, you'll have 200. Third month, 400. Fourth month, 800. Fifth month, 1,600. And then the sixth month is 3,200. Okay, so 3,200. Okay. Now let's go to 12 months. So 7th month, 8th, 9th, 10th, 11th, 12th. On the 12th month, you will have $204,800 in 12 months. Does that sound nice to a lot of people? Who would be upset on making that in 12 months? Do you guys see this? What I'm saying is that at first, it doesn't seem like it's cool. But I'm telling you right now, if you have $1,000 in your account and you're risking 2-3%, that means you're risking $20 to $30 per trade. That fluctuation in $15 to $20 is not going to make a big difference to you. But then if you catch 100 pips, you make $100. You gain 10% of your account. So the whole main point is that you keep doing this for however long with proper risk management. Yes, I'll give you the trading style of what to do, but majority of all trades, we all go into profit. For the past 3 weeks, we haven't lost any trades because we focus on 2 pip stop profits for every 10 to 15 pips, right? Forex is not one of those things. It's just like I said, gambling and tossing up a coin and seeing who here feels that you're traded like that. And also who here feels that we're taught that way. That's all about having accurate entries, over leveraging our account, and then like we make a quick come up real quick. And then we could sustain that for the rest of our lives. Who feels that's sustainable? Canada is expensive, bro, but it's pretty good. What do you mean? All right. I'm just making sure that everybody's like paying attention. As I can see, I just want to make sure everyone's getting this. Like, I honestly, if I were you, I'd be more excited about this than anything else. I'll be more excited on the fact that, wow, I could actually trade to a point where I'm not stressing out every single night. You really think that's how we're supposed to trade? Pulling out our hair every single night, sweating, hoping and praying that price goes into the direction that you're supposed to go through? Like, for real. Like, if you really think about it now, it's like, wait a minute. Now, if someone asks you, so what's your lot size? And you're like 0.03. And they're like, why are you trading with the 0.03? I was like, because I have $300 in my account. Oh, that's not cool. I'm trading with standards. Cool. Let me see where you're at in 12 months. And let's compare my 12 months. Okay? So what I'm going to do, rather than being a person that just says these things, I'm actually flipping a $200 account, which is the hardest thing I've ever done in my entire life, with proper risk management. And it's connected to an FX Blue, so you guys could see the percentage gain of the trades. So you guys could be able to see it. You follow this on a consistent basis, it's easier. That's why now you could get excited to take swipe trades, you know, with proper risk. Now you could get excited to take your personal trades with proper risk, right? It's very powerful to do this, because now it's like what happens, everyone thinks that you're supposed to trade stressfully. No, let me give you an example on this. Here, I'm going to take a picture of this so you guys can keep it for yourself. Where'd I go? Where'd it go? Which one was it? You're odd? No. All right. So I'm going to give you an example, right? The example that I have drawn up was right. What was it? You're odd. Was right here, right? When we're looking at on the consistency behind this, look how simple this was. You know, when we were looking for a trade, people ask me, what are we looking for? What I'm looking for is I look to the left. When I see price break an area, I use my crosshair, right? Crosshair. So you can see vertical and horizontal grid lines. You see it everywhere I go. You can see the lines. I see price break. I look to the left. What area of resistance did it break? Boom. So now I highlight this area. I have this zone here. So when price comes into that area and closes above it, then I enter into this trade. Well, let me give you an example. What if you entered off this trade right here? Okay. Was there little to no drawdown? If you did take a drawdown, that was what? A 13 pip drawdown. If you're trading with proper risk management, it wouldn't margin call you and take you out the trade. You'd actually be fluctuating these 30 pips over here. It would never came down to 30 pips. Price moved up 10 to 15 pips. The moment it moved up 10 to 15 pips, you put a 2 pip stop profit, and then price continued moving on into that direction. Okay. So then you could have been taking and took that entire movement. That entire movement from here to here was 217 pips. So you're telling me in 2 days, you already collected 217 pips. Okay. Price comes back down, hits. When you see price break a certain area, you look to the level where it hit. This was the nearest area of resistance. Price came and hit it and continued moving up. So you could have took that piece right there. What was that piece? 246 pips. You know, so the whole main point is the fact that you're taking your piece, taking proper risk. For a majority of people, your success could have been a lot more if we just focus on doing 0.01 and only risking 25 to 30 pips per trade to gain 50 plus. That's the whole main point. Because once you start to do this the right way, if you watch the Power Twin Trading videos, you could be able to see how we actually trail our stops underneath all these movements, so that way we could capture the entire piece of it. Okay, this was called out yesterday. I said price broke this area of resistance. Let me delete this. Broke this area of a ceiling. We wanted price to actually come here and test off of it. It never did. It never tested. It actually broke through it. And I said if price breaks and retests, then that's where it enter. So price broke this floor and became a ceiling. And right now, if you collected this trade, you already collected your 30 to 50 pips. You have 2 pip stop profit and you still be in this trade. Make sense? So how did I figure out how to do this? What I would do is on every single currency pair, let's say if I pick one. For now, I just pick GBP, JPY. Now, I draw everything up on the 1 hour. The reason being is because I want little to no drawdown. If I draw everything up on the 4 hour, if I take a trade off the 4 hour or the daily, then you have to take with a smaller risk because of the drawdown is more exponential. What I would do in order for me to have understand, hold on, right here. What I would do to actually get better, okay, is on a downtrend, I highlight all the areas that were the best entries. Look at this. This was in 2017. So these are all the areas that were the best entries. Okay, and I figured out something. So then I drew on those areas an area of resistance, which is an area of a ceiling, wherever the yellow circles are. Okay, now look closely. Even just for this alone, what was the common factor with all these? I have an area of resistance, but then I look to the left, and it once was a support level. I have an area of resistance of a ceiling, and I look to the left, it was once a floor level. I have an area of a ceiling, I look to the left, it once was a floor level. But here's the thing. Even if you took any of these trades, say the drawdowns were what? 19, 20 pips. Say if you entered over here, this is support, and you say if you entered off these, most drawdown you would have had was 21 pips, okay? Because this is GJ, it moves more volatile. Say if you took this trade here, support right here, what was the drawdown here? 12 pips. And all these trades, some of the drawdowns go anywhere from 12 to 20 pips. So the thing is, if you take these trades, you have to realize that you have to trade with proper risk in order for us to stay in it. The moment it drops, then you can do 2 pip stop profit. So I highlight all the areas on a downtrend and on an uptrend. On a downtrend, I look for all the short positions. On an uptrend, I look all for the buy positions. The reason being is I always use this metaphor consistently over and over again. You know, it's like surfing. You know, every single time that you're about to take a trade, think to yourself, are you that person that's standing up on your surfboard when there's no wave? Or are you that person that's actually paddling, with the wave when the wave is coming? A lot of people are standing up on a surfboard and falling into the water because they're not waiting for that setup to happen, okay? We look at these setups, we see it, we wait for it. Price broke this area. The way that we see it is the moment that it broke, everybody always asks me, how do you know what resistance or support for it to retest? Well, when these moves happen, this is what Chris Terry taught me. It happens, what it does, it makes a move, it does a correction, and it does the real move. It makes a move, does a correction, and does the real move. Chris said that he made all his millions, right? All his profits from the true move, not the correction, from the true move. So he saw that break and that retest, took it, okay? A break and a retest, and he would take it. And he would focus on just mastering that, and that's what he would do, and then he compounded the right way, and then that's how he was able to make his millions. And he did this with commodities and with futures, okay? So I noticed a pattern with all this. That on a downtrend, floor is a ceiling, okay? The floor is a ceiling, the floor is a ceiling. You look over here, create a new floor, but the floor never became a ceiling. So I noticed that the only time that I would short it is if the floor became a ceiling. And how do I know the shift in momentum? How do I know the shift in the trend? Well, guess what? If the floor broke floor, ceiling, broke floor, ceiling, broke floor, ceiling, right? Made a new floor, but never broke it. The newfound ceiling was broken, which means now the trend has shifted as a shift in momentum. That's what Chris Terry calls it, a shift in momentum. Once we see a shift in momentum, we see that it breaks a level of resistance. And that's when we start to look for the uptrend. You can see that consistently. You can see right here, on an uptrend, I highlight all the areas that were the best entries for a buy. And I look for areas that had little to no drawdown. What little to no drawdown means is that means it wasn't that negative before it went positive. That's the main focus. And you can see here on how simple this is. People always ask me, they say, Chris, do you have to look at your charts 24/7? Are you always on the charts like all the time? You know, when you get to sleep? Here's how the trade set works. Okay. So look at all this. I draw the areas of support wherever the yellow circles are. And this is my homework. This is my back testing, because I would do this from the beginning of this chart all the way to the end. Once I was done, I'd go to a different currency pair. And I'll do it over and over and over again. You know, for a lot of times, people thought that I was being redundant. People thought that I was being psycho. They said I was spending too much time on the charts. They don't understand why. But look what happened, okay? Look at this. I look, ceiling, floor, 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 ceiling, floor. Look right here. Ceiling did not become a floor. It ended up breaking the newfound floor and becoming a ceiling, shift in momentum. That's when I'd figure out the trend change. So if I'm looking for a buy position because it keeps breaking breaking resistance, breaking a ceiling, and then retesting it, as you can see at the top here, what happened? It never broke that newfound resistance. It actually dropped, and it broke the newfound support. And so now we're asking, what are you looking for? When I see price break, I look to the left. What did it break? Broke this floor. Boom. That is how relevant I want that trade set to be. I look at the closest area of support that it broke, or closest area of resistance that it broke, and I look for a retest of that area. Look, broke this support here, retest. Broke a level of support all the way down here, it retested. So this became from floor to ceiling, floor to ceiling, floor to ceiling, floor to ceiling. The floor did not become a ceiling, and now the ceiling is a floor, ceiling is a floor, right? Consistently. Ceiling, floor, ceiling did not become a floor. The floor now became a ceiling. The floor now became a ceiling. The floor now became a ceiling. You see the shift in momentum constantly. Floor is a ceiling, floor is a ceiling, right? Floor became a ceiling. The floor did not become a ceiling. It continues to break. Look to the left. When it continued to break, where's the nearest area of resistance? Right here. Here's a ceiling. Became floor. Simple. Ceiling, and when it broke, became floor. Became floor. Is everybody following me so far? Is anyone having any like breakthroughs with this? So I would highlight all these areas. Is somebody drawing on this? Who's drawing? What does that mean? Okay. All right. So then they said, how do I trade to the point where it's on my, you know, who's drawing on this? Freaking. Yo, whoever's drawing, can you just delete that?
Guys, we're going to start kicking people out for whoever is drawing, guys. So if you're drawing right now, you're going to get kicked out.
All right, cool. So this is what I'll have on my phone. So if I'm looking for a trade setup, okay, what I would do is if I'm looking at Euro JPY, I'll look at the area of, if I see a lot of consolidation and it looks messy and then it looks choppy, I really don't want to mess with it. What I'll do is I put the highest area of resistance, and over here I put like the lowest level of support. And why didn't I pick this one down here? Everyone always asks me, why didn't you pick this one right here? I picked one that fit for all this, and this. So I kind of compromised a little bit. And that's what I'll do. And what would happen is I would have this on my cell phone, and I won't even draw a zone. I'll wait for it to break, and I'll wait for it to retest into the area. But that's not like a big move or area that I'm looking for right now. What I'm saying is this would be the perfect one right here, is this. I have this set up. And I have this set up like this. Right here. So what I would do is I have this area of resistance and area of support. Because when people ask me, how do I trade this when like I'm away from it? Then go to your cell phone on your MetaTrader 4 and draw the same area of resistance and support. And then if you could draw a zone, right? You could draw a zone. I pick from this wick to this body of the candle. I pick anything that is touching or crossing through the area of support or resistance. And I draw the same zone on my MetaTrader 4. Does anyone know how to draw zones on your MetaTrader 4 on your cell phone? The way that you do it, because I know some people don't know how to do that yet, is you go to your trading app. Okay. When you go to your trading app, you click on a chart. Okay. You have a chart. There's this thing on the top that has like shapes. You click on the shape, and then you can put a square. And you pick the square, and you draw it. You could draw it now because you click on shapes. When you hold it, there's this thing called properties. When you click on properties, you could change the color of it. I change it to blue, and I put fill to on. So that way I could have it. So that way when I draw out my zones, you can see it will look like this. I'll show you. I want to give you guys an example of what a trade would look like on my cell phone. Okay, so on my cell phone, this is USD CAD. What I did was I drew a zone where the area of support was, and I drew an area of the zone and then support. So all I do is I wait for price to come up and touch it. If it touches it and closes underneath, then I enter. Okay. So if I'm looking at Euro GBP, this is what I'll do. I go to Euro GBP, go to my chart. If I want to copy the exact same thing, this is different on TradingView on your computer than it is on your cell phone. So I draw the exact same thing. Sometimes I don't even draw the zones. This is what it looks like. The way that looks like on Euro GBP here, this is the way that looks like on my phone. That's all it is. All I'm doing is I'm waiting for it to break that line of support and for price to come up and test as resistance. The way I could break it down is like this. If I see price break that level of support, come back up, area of resistance, price drops. Same thing with this. All I'm doing is I'm waiting for price to break that support line and retesting the same way it is on here. So it's nothing crazy. Like there's nothing crazy that I'm looking for when it comes to my cell phone. All I'm doing is waiting for the same thing that I drew up on my charts, on my trading view, onto my cell phone. So now I could be in the gym. Now I could be at an event. Now I could be just chilling. Now I could be wherever. I could be in the movie theater, whatever it is. And I look at my phone. I saw that it broke an area. I'm like, all right, waiting. Comes up to retest it. I take the trade, proper risk management. It goes 10 to 15 pips in profit, 2 pip stop profit. I always put a 30 pip take profit on one of them. Yeah, I always look in the 1 hour chart. Okay. Does everybody feel that like, did anyone have a misconception and they think that we have to look at charts? Who here feels that you had to look at charts 25-8? Anybody that had to go through that? I wanted to find a way to where like I could actually trade from my cell phone. So all I do is like now I have an area of relevance and then I draw the same thing on my phone and I wait for that to happen. Okay, if I'm looking for, let me see if I could look for one that's like relevant right now. A lot of the stuff is in consolidation. So there's a lot of stuff that I wouldn't even trade right now as we speak, to be honest. There's nothing that really looks good to me. That one was good. Okay. So if I give an example on this one, This one is euro odd. Guys, 1 hour. Everything that I say here, I'm not skipping out on any information or withholding anything. That's it. Everything I say here is everything that I do. So euro odd. So if I go to euro odd, I want to give you an example of how I would set it up on my phone when I'm away from it, when I'm away from my computer. Okay. And how this trade would have happened. Okay. So you guys saw it when I was on the screen, right? This is how simple it looks on the cell phone. Let me put this. Should I turn the brightness down, or you guys are going to see that? Price study what? It dropped, it broke that level of the zone, came back up, retested, that support became resistance, and that was it. And that's all we're waiting for. So the same thing that it looks like on here. So if I'm looking at this trade setup right here, I said, okay, if price will either break here, if not, then it will break, and then I'll retest this support as resistance. I'll break this floor and test as, a ceiling. Now, that on my phone, does that look complicated to have? Does anyone feel that that's complicated to have to make that? Who here would have been able to draw that box and draw those two lines? And who would have took those trades when it went into the box? And then how would you guys have felt that it just dropped drastically the moment you took those trades in the box? Yeah. Also, don't worry about double tops and stuff or head and shoulders. Remove all patterns from your head, okay? And the reason being is because of this. I'm going to show you guys something. Look, this is a head and shoulders. Does everyone see this shoulder right here? Does everyone see this head right here? And does everybody see this shoulder? Wasn't that a head and shoulders? Everybody saw that, right? Shoulder, head, shoulder. Resistance. You see that. Who here agrees that you can see that head and shoulder? Does everybody see that? There's 91 people on the call. Does everyone see that? Now, here's what happened. Shoulder, head, shoulder, price went up. Okay. Who here agrees that this area right here could have been considered a double top? Double top. Resistance, resistance. Was that an easy double top right here? Okay. But how many pips did it go in the opposite direction? 150 pips. So the reason why I'm saying this is for a lot of people that learn, whether market maker or regular other price action, that 99.9% of other people have learned the same thing. So that's the reason why we fail, because no matter how many times that we see and we get hurt, how many of us have took double tops, triple bottoms, triple tops, whatever it is, and it went into the direction it was going in the first place? Every single person. So then why do we continue to do the same thing? It's because we go based off what we were taught, even though from what we're actually experiencing is the exact opposite. Okay? An actual trade is actually happening right now as we speak. Support became resistance. I would have entered this for a short position. Actually right now on this call. Does everybody see that? So the main thing that I want for everyone to take away from this, number one, was the first part that I broke down. The first part that I broke down, yes, 1 hour. I said that, 1 hour. The first part I want people to take notice of what I broke down was the proper risk aspect. Okay, 10 to 15 pips in profit, 2 pips stop profit. Make that a rule. It makes you feel more comfortable. How do you guys feel when you're in a risk-free trade? You feel like you're on top of the world. Okay, especially when people decided to over leverage and then have a stop profit in place. They feel protected, right? But no matter what, 2 pips stop profit, 10 to 15 pips in profit, 0.01 per 100. But Chris, I'm not going to make, it doesn't matter. Always think about long term. Always think about what happens 12 months from now. Always think about, damn, Chris showed me if I average 1,000 pips a month and I do 0.01s per 100, that I'll double my account. And that within 1 year, I'll make $204,000. Can everyone do that? Or is there some greedy people in the call and said, $204,000 is not enough? Whoever feels that $204,000 is not enough? I say it's enough. Because think about where it'll be in another 12 months. Okay? So 0.01 per 100, no matter what, risk 2 to 3%. I always do 25 to 30 pip stop loss, so that way you can deal with the fluctuation instead of being margin called. Okay? And then no matter what, for swipe trades, take all of them with a 0.01. The thing is, people end up taking only the losing ones, and then they don't take the winning ones. Take all of them consistently. Have a set swipe trades account specifically only for swipe trades, and always copy and paste no matter what with 0.01 per 100. 10 to 15 pips in profit, always do 2 pips stop profit. This is the key to your success. Whoever neglects this, you're just going to ruin your accounts. That's just the way it is. We're not being surgical with it. We're not being strategic with it. Okay, now for the marking up on the charts aspect is you have to go into the gym. You have to shoot. Like you have to shoot the basketball in order to be a good basketball player, right? We can't just play NBA 2K and then think that we're super good at basketball. You know what I'm saying? You can't, right? So what happens is you go into a currency pair. You scroll all the way to the back and you go, if you see a downtrend, you highlight all the areas that were the best selling positions, the best short positions, and ask why, and then start drawing, okay? And then you see it go into an uptrend. Then you delete everything and highlight all the areas that were the best entries for the buy, okay? And he said, why did this happen? And you get better. Now what happens is the repetition factor. Would you recommend multiple small accounts or one big account with proper risk management? Just focus on one. The thing is when people, would you recommend multiple small accounts or one big account with proper risk management? What do you mean? I'm trying to understand the question, because why would you have multiple small accounts? .01 per 100. Also, here's another tip too as well. Stop taking so many currency pairs, okay? When you take a trade, when you take trades, the only time to take another trade is if the previous trades are in a 2 pip stop profit, okay? You do what you feel is best for your accounts. Have one account for swipe trade and the other ones are for your personal stuff. What I'm saying is that, have you guys ever took trades to where you have 2 trades that were winning, but the other 3 trades and other currency pairs were bad, so technically you weren't making anything at all? So focus on one pair that's okay, this is a good trade setup. You take it. The moment's 10 to 15 pips in profit, 2 pips stop profit. Then you could take another trade because that trade is now risk-free. Does that make sense? Don't take any other trades unless the trade that you're in right now is already a 2 pip stop profit. Because what happens is that's how you start to over leverage your account. You can say that you have $1,000 in your account, you do 0.10. Chris said to do 0.10 per 1,000. So then all of a sudden you take 0.10, 0.10, 0.10. Well, if you add them all together, that equals out to 0.80. You know what I'm saying? So that all equals out to 0.80. Okay. So 2 to pip stop profit no matter what, 10 to 15 pips in profit, twin trade no matter what, highlight all the areas that are best entries for sell, draw it up, boom. Once you're done with the currency pair, scratch it, go to the next one. Once you're done with that one, go to the next one. And then people ask me what happened when you finish all those currency pairs. Well, guess what? I did it again. I just kept doing it. If you could tell who's going to be a really good trader, who's going to be a really good marketer, or who's going to be really good at anything when they have integrity. any chance that they get to draw and study, they're doing it. But the people that talk about the complaints of the lack of production of things are just being lazy. It's just the truth. Same thing when it comes to building and marketing. When people that complain and talk crap about building, people that talk crap about whatever it is, it's just the insecurities of their laziness being projected onto everybody else. It's the truth. Building, trash. Network marketing sucks. No, you just suck. You suck at building. Because you won't even do 2 events a week. You won't even do 3 calls a week. Same with trading. Man, I can't trade. Trading's not good. Everything. I'm like, when's the last time, like, how many times do you draw on your charts? Like, how many hours do you put into it? And then the people will look at me like this. Like, they'll look at me like, what do you mean? What? It's just the truth. You know what I'm saying? So it's just real nuggets when it comes to like life stuff. If you really want to be successful in this trading stuff, just mark up charts consistently and back test. Be obsessed with it. Be at the point where people think that you're a nerd. Be at the point where people are like, dude, this dude's like obsessed with it. You know, the people that are obsessed with things are the ones that, it's like Grant Cardone, be obsessed with be average. You see, which one would we rather be? You know, so focus on that when it comes to that. If you're going to do how you do anything is how you do everything. It's the truth. I'm trying to give you guys good nuggets on the mindset aspect when it comes to this stuff, because there's really no secret to it. Now you guys know what I did every single day was I drew and I drew and I drew and I drew and I drew. And then I also focused on the parameters. That way I wasn't being hurt anymore. Chris, why did you trend trade? Because I got tired of looking for reversals and price continued going to the direction it's going in the first place. Chris, why are you going to trade proper risk management? It's because I've seen so many people that don't know how to trade, over leverage their account and blow their accounts and be hurt from it. And then they say they don't want to do Forex again. But then I can make it attractive to do this. If I do $100, risk 2 to 3%, double your account every single month, make a goal of 1,000 pips a month, and then you could have $200,000 by the end of the year. Okay. Chris, why you say take every single spike trade? Because you keep taking the losing ones, and then every time you see the winning ones, you get hyped and you take it again, and then you take the losing ones, and then you never get to take the winning ones. It's the truth. You know what I mean? So it's like all these parameters that's like, oh, that seems like so much stuff. If you really think about it, it's not that much. You're taking your freaking hand and changing the numbers on the phone, and you're going onto the computer and you're drawing, when you're taking a finger and drawing a box and you're drawing a line. It was a lot of hard work, is working every single day, being in debt, being stuck, not knowing how you're going to do this. Okay. The people that are going to be the successful are the ones that just get it done. All right. Did anybody get value from this call, from the trading side? Not is everyone going to be like, dude, now it's going to be dope to be doing proper risk management. Awesome. Well, was there any questions before I hop off on this? Sweet. Awesome. Yeah, I believe John will have the recording, so I guess he'll post in your guys' chat. But, yo, thank you for letting me teach.
I got you, bro. Definitely appreciate you every single day, man. You know, it's a blessing to have you on this call and definitely educate the masses, brother. I appreciate all you guys. Please follow Chris on Instagram. He's all of our upline as well. And also see him on IML TV, guys. So let's start trading with risk management. I appreciate you guys. And yeah, peace. See you guys later.